Is the Silicon Valley housing market primed to withstand the economic crisis caused by the coronavirus? Watch this video to find out. This is Danny Gould with the Selling Silicon Valley Group. Welcome everyone to another Silicon Valley Market Snapshot for the first week here in April of 2020. Another very special episode or special edition, the shelter in place edition, if you will. I got full quarantine here going on right now. But the good news is that I'm healthy, I'm safe, my family's healthy, my family's safe, and I pray, hope and trust that all of you are staying healthy and safe during this time. And I know the pressing question is, how is coronavirus, how is this all playing out and going to impact the housing market here in the short term and in the long term? But before we even do that, let's just look at the statistics. And the stats are going to give us a bit of guidance and show or demonstrate some of the thought processes that are going on in my mind right now. But if you look at the graphs below, you'll see these are active versus pending and sold inventory here in Santa Clara County for both single family homes and then condos and townhomes respectively. And if you notice, the graphs here in both the single family sector and the condo and townhome sector, active inventory tends to rise month over month for the first 6 months of the year. We have that apex, at around the May-June timeframe, and that holds true pretty much every single year. Well, this year you'll notice that for both sectors we have pretty much a neutral month over month progression in terms of active inventory. And you'll notice what you don't see here is that things were progressing nicely up until shelter in place was enacted, and then all of a sudden we had a huge drop off in active inventory come on towards the latter end of the month. And so whenever we look at what is happening in the housing market or how home prices are being affected, we typically want to look at primarily inventory levels. I've said it before on many of my videos, and if you've been watching these videos for any period of time, you'll know that the amount of homes that sell here in Silicon Valley tends to be fairly consistent year over year, which implies that demand is fairly consistent year over year. And the only thing that tends to fluctuate dramatically is the active inventory. And that basically predicts or can predict how competitive the market's going to be, because of course the less inventory we have and if we have consistent demand, that's going to put upwards pressure on prices. And so you'll see my little cheat sheet here, but you'll have the graphs down below. We had 718 homes listed for sale in the month of March, whereas last year at this time we had 1,050 units. And in terms of percent change there, that's negative 32% year over year. The pendings, we had negative 30% drop year over year, and the solds, we had a negative 19% drop year over year. Now, the reason why solds are not necessarily in the 30 or 40 range is because sold data tends to take 30 to 60 days to really show up. So we expect to see huge drop-offs in the sold numbers in April, and definitely when it comes to May, and then likely into June, July, just depending on how all this plays out. Now that's in the single family sector. Now if you look at the townhome and the condo sector, you'll see that we had pretty similar statistics there, like a negative 41% drop year over year in active inventory, negative 33% drop in terms of pending sales, and then a 5% increase in terms of sales. Now, remember, last year at this time, the market wasn't particularly strong for condos and for townhomes, right? And so to have an increase in sales this year makes sense, because in February we had a really great market, and so heading into March we expected to see a lot more sales than we saw at this time last year. So again, wait until April, May to see how that plays out. Now, I wanted to show you those graphs, and you'll see these data charts here, and bear with me here for a second, right? So what I measured in addition to all of this was the current week 4/1 through 4/8. So April 1st through April 8th of 2020. And we measured the new listings for the week, contingent and pendings for this week, as well as sold inventory for this week. Now, or posted sales in this week. Now, I measured that across the last 4 years. Okay, and you've seen similar charts on my Silicon Valley snapshot if you've been watching these for any period of time. You'll see that this week we had 221 new listings come on this week. Okay, well, what does that tell us? Number one, it tells us that the market hasn't completely stopped, right? Sellers are still selling. And what I'm telling all of my clients right now, especially if you're a home buyer in the market, is that if you're out there and you're approved, and make sure that you have lender approval, and we'll go into why that is in a second, but if you're looking at inventory that's currently listed for sale, it's because the seller has some sort of motivation, right? Like people aren't testing the market right now. Let's be real, right? Because they're not testing the market, there's some sort of underlying desire or need to move. There is going to be more, I would say, it opens up the conversation more, right? And so if the seller isn't getting an offer in that first 7 to 10 days, which, by the way, there are many counts right now still of multiple offers, even in this market, where things are getting bid over list price. That is still happening here in Santa Clara County, and it will likely continue to be the case for the foreseeable future, because the best homes on the best streets with the best upgrades and the best schools and all that, those are still very desirable homes, and there are still plenty of buyers out there that can afford and are qualified to buy those houses. So those houses are still selling quickly. It's those mid to lower tier homes in those neighborhoods, right? Like the worst house on the shady block that that is priced pretty aggressively. I mean, pretty high. But that's what I mean by aggressively. Priced pretty high. They're pretty ambitious with their pricing, and so those are the ones that are going to tend to not sell as quickly, right? Especially in this kind of environment. So, anyways, I digress. We look at those numbers, and I measured it across 4 years. You'll see that data chart right here. I also did a 3-year trailing average, and then I measured that as a percentage change versus this year. And you'll see that the drop-off this week is negative 54%. So I want to compare that to the active inventory in March change year over year, which is negative 32%. So basically negative 32 to negative 41, right, for condos and townhomes. So what you're looking at there is in April, in this first week, we're seeing even more of a drop off in active inventory, right? Even more of a drop off. Now, if you look at pendings, you'll see that that's negative 67% change versus the 3-year trailing average. Now, when we look at when we compare that to the percentage change year over year in March, we see that it's dropping off pretty significantly. Like the amount of pendings, there's far fewer homes going into pending status than there were even comparatively to like last month, year over year. I hope I'm making sense here. If you have questions, like I know this is kind of like pretty high level statistics, but like bear with me. Then finally, for the solds for this week, we're at negative 26% change versus the 3-year trailing average. That's significantly down, especially in the condo and townhome sector, right? So when we look at this overall, right? Now, by the way, there's some discrepancies here. This is measuring the percent change in single family plus the condo and townhome sector combined, and those are kind of split. But what you'll see is that any way you slice it, everything's dropping off. All the numbers are dropping off. Active inventory, pendings, sales, right? The question is, what's dropping off faster, the pendings or the active inventory? And if you look at that data, it's pretty obvious that pendings or demand is dropping off faster than inventory levels. And so for the last, I would say 3 weeks, I've said this, is that I don't see a huge surge in supply coming or a huge drop in demand. Now, this isn't monumental, right? Like these numbers, we can still overcome them, right? Because when you're looking at this, there's 136 contingent or pending sales this week versus 221 active. That's still pretty good. We're still consuming, the market still consumed or absorbed well over half of the inventory, right, in a week. And so when you see it in that capacity, it's not like there's 5 homes being sold and 200 on the market. Then we're in trouble. But what I want to prepare all of you for is that this could be the case for the foreseeable future. Now, how is this going to happen? What's going to happen next week or this next month or the month after that? There are so many variables here. There's so many factors involved. The economy in general, the unemployment rates, the shelter in place. What does that do to our economy, right? Like what is that going to do to people's ability or consumer confidence, right? Their ability to buy or their confidence in buying, right? Because those are two. They're correlated, but they're not necessarily tied together. You're seeing a lot of buyers kind of take a step back, even though they have the ability to buy. They are taking a second look at their finances. They're taking a second step or a step back to just kind of reassess the situation and see how this plays out. So, what does this mean for the foreseeable future? Well, I think the data here doesn't lie. Obviously, listings are down. Sellers are hesitant to dip their toe back into the water, but clearly buyers are being hesitant to dip their toe back into the water as well. Now, a big part of this is the shelter in place. Once shelter in place gets removed, do we see buyers re-enter the market because they now have the ability to see all the inventory that's available to them in person with masks and gloves, hopefully, right? I hope you guys are taking the proper safety protocols. My team, whenever we show a buyer a home at this point, if it's vacant and the seller allows us to view that home, the county has now said that that's okay. Right? So as long as we wear masks, so we bring masks, we bring gloves, etc. to the showings. And for all of our listings, we've updated our marketing protocol to include safety precautions at the front of the listings if they're vacant. So anyone that's coming into the home wears a mask, gloves, etc. We provide that for the buyers that are viewing the home and for our buyers when we are viewing a home. That is just that's just common sense now, folks. Right? Like you don't want to unnecessarily expose yourself because you're too cool for school. Right? Like. Please. So, anyways, if you have any questions about any of the data that I just presented, please reach out to me. One last thing I wanted to show you though is absorption rate, and you'll see these graphs here for this single family and the condo and townhome absorption rate. The single family absorption rate was at 88% in March, which is very high when you compare that to what it was last year, which is 75%. So we're still trending up. Now, how's that going to look in April? Well, that remains to be seen, but I think we can all expect there to be a dip. Here's the punchline though. Despite all the hysteria and the chaos, we are not in a buyer's market. Let me just be very clear with all of you right now. We are not in a buyer's market. The market still favors the seller, right? Until something drastic changes, that will continue to be the case. Now, the one caveat I said, and remember, this is how I'm going to end the video because I said before, pre-approvals are a big deal right now. Many lenders are pulling out of the market. You would be unwise at this point. You would be very unwise if you are to negotiate a contract and remove your loan contingency before entering the contract. Even if there are multiple offers, lenders are still, like, the lending side of things are very volatile right now. And so you want to make sure that just because the lender gave you a pre-approval does not mean that they've issued you a commitment to lending to you, right? And so because there are so many extraneous factors right now, because there are so many things outside of your and my control, the prudent thing for you to do is if you do make an offer as a home buyer, to make sure that you are protecting yourself. Now, home sellers, you should also protect yourself as well. This is where the negotiations really count, where they really matter. Because if you're in a situation where a buyer is coming in and they're stacking all these contingency layers on, a good agent will be able to tell you how to counter the ones that are most detrimental to the overall success of the escrow first, right? Because there's a pecking order of all of these different contingencies, and which ones are most and least important for the buyer to have, and for the buyer to essentially, you know, come in without really having, or to come in with having all these protection layers that really make it almost impossible for the home to sell unless everything goes perfectly. And so there are certain things that you can and can't be doing at this point to make sure that that you are setting the escrow up for success. Because ultimately right now there are, and unfortunately, you know, we've experienced it too, where there are homes falling out of contract for X, Y, or Z reason. And a lot of them are out of people's control, right? Unfortunately, at this point, but all we can do at this time is make sure that if you are making a buying or a selling decision at this point, by all means, go for it. You know, if you're a home buyer in this market, there are opportunities out there. Let's be real. There are many opportunities out there, and there are opportunities to get great homes, get in a great home right now at a great rate. And make your Silicon Valley dream come true. Do not let the noise affect your desire or your ability, not ability, but don't let the extraneous noise impact your desire to be in that dream home of yours, right? Or to take that next step in your Silicon Valley dream. This will pass. You know, in 5 years, your decision will be a great one, regardless of what happens in the short term. And I stand by that statement. Anyone that says otherwise is quite frankly an idiot. But if you're a home seller, or conversely, if you're a home seller in this market, just realize that these inventory levels are incredibly suppressed right now. And it will take a while for the inventory levels to pick back up. And so with less competition, that does give you some level of power, especially, as I mentioned before, if you have a beautiful home on a beautiful block with the beautiful upgrades. But even if you don't, there are many things that can be done to bolster the value of your property, because the truth is that every month, every quarter that we wait here, we're basically we're taking a gamble every single time. If you're a home seller, right? You have a significant amount of equity that you've built, and the seller's ridden this massive Silicon Valley wave, right? And I'm not saying that it's going to come tumbling down at any point in time. I can't predict that, but all we can say is that, hey, do you really want to leave it up to chance? If the goal was to sell in 2020 anyways, I'm just saying, like, if this was your goal in the first place, was to sell in 2020, why leave it to chance? Why leave it to chance to see whether or not, you know, all of this really has a significant negative impact on the housing market? Because every month you wait is an opportunity for someone else to give your equity away in this kind of environment where there's this much volatility. The upside is nominal. The upside is practically nominal at this point. You know, in fact, I would say it's non-existent, right? Like, the upside to waiting at this point is practically non-existent if you're a home seller. Now, if you're like, oh, we'll sit and we'll wait for another 5 years, mazel tov, do it. You know, if you have the ability and you want to do that and everything checks out, like, fine, wait for the next peak. That's totally fine. But if your desire was to move in 2020 and you're just kind of sitting there, you're like, honey, like, should we do it? I would not leave it to chance. And I hope that you guys understand where I'm coming from on that. I don't see how this plays out better for you in 6 months. I just don't. It might be about the same, but do you see what I'm saying here? I hope you guys understand what I'm saying. If you don't, go ahead and leave a comment down below. But as always, everyone, I am here to answer all of your questions. I have unlimited time now during this pandemic. I'm saying that tongue in cheek. You know, we have 6 listings that we're waiting to put on the market right now, and all of them are waiting for one particular reason or another. I'm encouraging all of my sellers, and I'm telling them the same thing that I'm telling all of you in this video. The messaging is very consistent. I'm not telling my sellers another thing and telling you the other thing. I'm telling them the exact same thing, which is the sooner we put the home on the market, the better. And I would encourage all of you home sellers to do the same. That's all I got for you guys. If you have any comments, questions, concerns, you can go ahead and leave them in the comment box down below. Send me a text, email, call me. Any way that you want to reach me, I'm here for you guys. This is Danny Gould, everyone, with the Selling Silicon Valley Group, and I will catch all of you in the next snapshot.